Good afternoon, traders. It's Bill Baruch with Blue Line Futures and your daily midday market minute. Before I get to it, like I've been saying, please subscribe to us on YouTube. We'd love for you to follow us. We'd love for you to help us build our following. So click that button in that bottom corner. So now getting to it here, we got the S&P. Stocks are consolidating, rebounding off yesterday's low. 46.20 in the S&P held. Remember, that was a rolling upside target. It's going to be a big floor, rare major four-star support, and we're going to remain outright bullish while it's out above there. It doesn't mean there aren't different swings to trade, and we've seen swings just going back to yesterday where you can short this market, and you're seeing the S&P 46.55, 46.58. It has surrendered that area from the overnight. Above there, it's much more constructive. Below there, we could see another swing and a retest into 46.20. Nasdaq did trade higher early. It did stall at first key resistance. It's about 16,150. And so as we see those come in and the Dow is trading down, you got the Russell 2000 actually trading higher on the session. It's going into the 50% retracement, going back to the record high on Monday to the low yesterday, right about 24.20. So keep an eye on the Russell. Does it hold ground against that 50% retracement, or is it more subdued and does the market come back in a little bit? These consolidations are very healthy after the market has had such a magnificent run. So keep all that in mind. These are healthy to build for the next move here in a very seasonally bullish time of year. Now, one thing that we're really watching very closely is the dollar. The dollar is on a very short term, a 30-minute chart, flagging and is breaking out from that flag pattern. But overall, this is momentum that's been carrying for a couple of days now. The dollar is breaking out above a ceiling and testing new highs on the year. But look at that ceiling going back to September of last year. It struggled as it's got into this 90 below 95, say 94 and a half or so. And now we're really extending those gains out above there using previous highs as support. If you go back to last year, the March whipsaw, massive whipsaw, as all these central banks started unloading this massive QE. The dollar's low was right into this 93, 94 area. You go back as well when this market broke down in July of last year. A lot of resistance was created by that volume and that breakdown. But now this flag pattern and this hold out above previous highs says this thing has legs. And I wouldn't be surprised to see the dollar move to 96, 96 and a half. And yes, that would weigh on commodities, but there are commodities out there with real supply-demand fundamentals that are more valuable than just the dollar and the dollar strength holding them back, and what could be sometimes a seasonally duller time of year for commodities. Look at natural gas. Natural gas tested into a big level support, 480, 490. We're looking at the February contract actually and buying some call spreads going out to February. We started doing that yesterday with clients. If you have any interest with that, call our trade desk. We would be happy to talk to you about what we're looking at in natural gas and natural gas call spreads over the next 60 to 90 days. On top of that, things in the soft markets are trading very well. Look at sugar moving higher today. Coffee it is extending gains right now. Just looking down to see that. Coffee's extending gains up above 211 going into options expiration. The soft markets have been on fire recently. Ag markets are doing things. So it's not all about the dollar, but the dollar can weigh on commodities. It's something that you want to keep an eye on. And you know what? Crude oil is lower today. It's not just the dollar. It is OPEC. OPEC was a little bit of unenthusiasm coming out of their monthly report on the demand side of things. Now, we've highlighted the reemergence of COVID and in some parts of Europe as well as China, but they're also thinking that you're going to see demand take a bit of hit because of higher prices. And so ultimately, higher prices are going to cure these higher prices is one of the aspects that they're looking at. And they're not so enthusiastic about 100 million barrels per day in demand that some of the banks have been talking about. It doesn't mean that crude oil is sticking a knife in and it's done. I think OPEC is playing the situation very nicely right now, and they don't want to bring back more production. At the same time, I don't know if they can bring back more production. So this is really a bullish narrative in and of itself. And ultimately, too, that the fact that they're unenthusiastic about demand, it keeps the White House from releasing some of that SPR. So I think dips are going to be a buying opportunity. I would love to see a nice quick whipsaw dip down to 76 and a half on this expiration of the December contract. Looking out to next year, you can find some very good value. And I remember last week I was talking about the June contract. You can go to March, a little better volume there. So there's definitely opportunities out there, and our trade desk is here to help. Now, one thing that the dollar hasn't weighed on today as well is the gold. Look at gold holding really well against 1868 despite dollar strength and treasury weakness. Now, the question is, can gold hold these gains into the weekend? Now, that's going to be the big question through tomorrow's close. We do have Michigan consumer sentiment data tomorrow. Now, I tend to think that gold needs to come back in a little bit, but guess what? It did it yesterday and it powered back higher. This is a breakout in gold, and we are overall bullish, but you cannot chase gold into this level. Silver is holding up very well too, trading above major 3-star resistance 25.28. So look how these markets closed to finish out the week. That's going to be crucial. But overall, very good landscape in gold. We just don't like chasing these prices right here. But give our trade desk a call. We'd love to talk to you about it in more detail. All the levels we have in the Morning Express, so check it out there too. 312-278-0500. Remember, futures trading involves substantial risk of loss and is not suitable for all investors.